Cool, sweet. Okay, so that's 12 o'clock. Let's crack on. Hey everyone. So we've got people here on Clubhouse. So in fact, not that many. Hey Wesley and Alexander, and everyone seems to be on Facebook Live. And annoyingly, I had high hopes for Starlink. So basically, I've got the new Starlink satellite internet thing. However, it's still in beta mode, and it keeps cutting out. Like every 15 minutes, it will cut out for like 5 seconds, which is annoying. However, it is beta, so we're just waiting to get more satellites in the air, and then it'll be better. So I've literally just had to swap over to the old Wi-Fi, which isn't the best. Cool. So today I want to talk about. I want to talk about the wealth and asset tiers, which is something which a lot of people aren't too familiar about, and also a bit of a Q&A. So, but before we get into the tiers, I thought I'd open up for Q&A first, because it always takes a few minutes for everyone to sort of get here at the start of these things, and if I started off with the tiers right now, people will be joining in going, what the hell? So, what questions can I help with, folks? Are there any burning topics which a little Norwich boy like me can help with today? Feel free to pop your hand up in Clubhouse if you have any voice messages or things you want to ask. Okay, Stuart Roberts has asked, what general advice would you give for investing in bullion? Is there a specific video on your YouTube channel? Also, can you recommend any software or protocols for sorting crypto tax? Yeah, sure. So there is a video on my YouTube channel called A Guide to Investing in Gold and Silver 2020 or something like that. And it goes through everything. However, in a nutshell, the things that you need to do, don't buy gold and silver bars. Okay, so China is the biggest exporter of fake bullion, but they're the biggest importers of real gold and silver. And I would say 99.999% of all fake bullion out there are in bar format. So for example, if you had like a 1 kilogram silver or gold bar, this is obviously a battery pack that you're looking at here, what happens is that they get tungsten, which is, so they'll get like a 1 kilogram or just under a kilogram bar of tungsten, and then they'll coat it with gold. And the only way to really find out if it's genuine or not is to drill through it. And so if you're buying bars, although it may be slightly cheaper, you're running the risk of getting fake bullion. And so this is why you need to get silver coins or gold coins, like the silver Britannia, the gold Britannia, the maple leafs, the American eagles, all that sort of stuff. And the reason you can't fake them is because they have set dimensions. So a maple leaf has set dimensions, and there's no other like metal on the planet which is or economically speaking, dense, and so you can't get make a coin with the same dimensions that weigh exactly 31.103 troy ounces. Grams. Sorry, 1 troy ounce is 31.103 grams, and so you need some accurate sort of electronic scales, and if it's between 31.103 to 32.5 grams, it's safe. But if it's above 32.5 grams, it's most likely fake, because it's got some, impurities in there, like extra copper or whatever. And if it's even a smidge below 31.103 grams, it's fake. So, yeah, weighing them is one to find that. And yeah, get them. Basically, there's a rule of you can't hold it, you don't own it. So don't buy gold and silver which is stored for you in a vault in Zurich or whatever. You need the physical stuff delivered to you. But that then runs the dilemma of costs, because you'll be paying a lot if you're getting bullion delivered to you. So there's VAT if you buy some of them, and there's also delivery stuff. So whereas if you're in the UK and buy the silver Britannias, it's CGT free and VAT free. So yeah, if you're in the UK, definitely get the Britannias. However, you then have to ask yourself the question of, okay, do I buy gold and silver? What is the reason that you're buying gold and silver? That's the question you need to ask yourself, and you have to understand the time frames that you have to be prepared to invest in, because with gold and silver, the real thing that's going to move bullion is when the world does a reaccountancy of itself in terms of bullion, and it does this pretty much every 40 to 80 odd years. The last time it happened was in Bretton Woods in 1944, where they fixed the price of gold at $35 an ounce, and they backed the dollar and the pound by gold, by a small percentage, and then every other currency on the planet was then backed by the dollar and the pound, and therefore you had a weird quasi gold standard which didn't really work. That then got disbanded in 1971. I think it was the 15th of August 1971. President Nixon got them off the gold standard. And since then, the whole world has been sort of fiat currencies. Now, the thing that, going back to the point, the thing that will get gold and silver really rocketing is when a major country like China or Russia backs part of their currency by a little bit of gold. And so, if you look at some of the YouTube videos on my YouTube channel, I did the calculation, and I think I said that if China were to back their yuan just by 10%, so 10% of their yuan with gold, it will then catapult gold up to something ridiculous, like $40,000 an ounce. And yeah, so really, it's gold. Buying bullion is a hedge against uncertainty. So if the world goes to pop, you've got some bullion there. But the thing is, it's really illiquid. It's really hard to sell. If you sell back to bullion dealers, they're going to rinse you in the prices, and so you then have to end up selling on eBay. So I've actually just sold half of my bullion. Oh no, almost half. I'm trying to sell half of my bullion to put it into crypto. So yeah, if anyone wants some of my silver, I got a whole bunch of Canadian maple leafs to sell. So if anyone wants them, I can sell them to you without the VAT. So you'll be getting them a lot cheaper than if you were to buy them on the thingy. So yeah, and it's a seesaw really. So for me, I'm directing a lot of money into crypto right now, simply because it's gonna, in my opinion, move a lot faster and a lot quicker in the short term. And I'm pretty confident that the top of this current bull cycle will most likely top out at around December, January time. So for me, I'm being a pig and I'm pigging in right now. So yeah. So hopefully that makes sense. Let's move on from gold and silver. Oh, your next question was also regarding crypto tax. Yeah, check out recap.io. What happens is that you hook up your Binance, Kraken, your feeds into Recap, press go, and it knows everything. And it tells you how much profit or loss you made, how much tax you owe, or how much tax you can offset. So if you have some losses from 2018, great, you can offset them with your future tax returns. So that's that. Oh yeah, Martin has answered that below. Right, what other questions? Oh yeah, someone said that they watched these daily updates, these wealth chat things, and they can't comment in the Facebook chat. And and it's weird because I've set this to public, and I've got a feeling that only Facebook friends can chat. So I think that may be the issue. Okay, Amanda has said, on the charts there is a minus amount. What would it mean if a stock went into the minus? Would you have to pay them money if you had invested it? I was asked this question by someone and I didn't know the answer. So a stock can't go to minus. It literally can't. See, this is funny because I used to think oil couldn't go to zero, and then oil went to minus $37 a barrel. But oil is a commodity and it's part of the commodities market, which is unlike the stock market. And so with commodities, I mean, the whole reason oil went to minus $37 a barrel is because it's a futures market. So everything's done by futures contracts. And so what happened is that there was a glut, massive surplus of oil, and all of the storage facilities were full. All the ships were just filled to the brims and anchored up on the water. And Cushing, which is the main oil depository in the US, was completely full. And so what happened is that at the end of the futures contract, people were like, "Ah, shit! If I don't sell this contract, I'm going to have like 1 million barrels of oil or 100,000 barrels of oil being literally physically delivered to my doorstep." And so they're like, I literally have no space, and so people were trying to get rid of their contracts. They didn't want like 100,000 barrels or more of oil being literally trucked to them, and so people, so some people, if they had lots of spare land, made an absolute fortune, and so people, that's why it went down. That doesn't happen with stock, so you can't get minus. So if you're looking at minus signs on the chart, it's just a charting thing, But stocks can't go to minus. It will go to zero, and that's when the stock goes bust or gets delisted. So that's that. Righty-tighty, let's move on to the main topic, and the topic today is asset tiers and wealth tiers, and this is something which a lot of people get, I think, caught, because it's a bit of a trap. So you have to imagine, annoyingly I can't have a doodle pad, but those on Facebook, you're probably seeing me do like a sort of a pyramid type thing, okay? And you have to imagine that the asset tiers are like a pyramid, and let's just keep it simple. There are 3 tiers. So the base level is what's called a primary tier, and a primary tier is basically base assets. So the example I typically use, because it's easier to sort of understand, is copper. Okay, so copper is a real physical metal. It's in the ground. People mine copper and iron and all sorts of other metals. And so it's a real hard asset. It's physically in the ground. Okay, so that's like a tier 1 asset. So it's real physical shit. You then have the secondary tier. So let's say it's a middle tier in this little pyramid here. The secondary tier is assets which are based upon the primary tier. Okay, so for example, a business which a secondary asset, a secondary tier asset or business could be a copper refinery, or a copper smelting refinery or type thing. Yeah. So what happens is this business, this refinery, is based off a primary asset or a primary tier. So copper is a real hard asset, primary tier. Secondary tier is the copper refinery or the copper haulage and transport company. The people that transport the copper from place to place. And then to really exaggerate this explanation, the third tier, right at the pinnacle of that pyramid, is what's called the tertiary tier. And the tertiary tier would be something like a copper futures contract or copper stock. There could be a company which is an exploratory / mining, like a copper explorer mining company, okay, or a company or a fund that is offering futures and options contracts. Okay, so right at the top of that tier, that pyramid, you have stuff which is completely removed, almost very far removed from the primary thing, the real copper which is in the ground. And so right at the top, if you're trading copper on your trading account, etc., you're not trading actual nuggets of copper, that's in the ground. What you're trading are contracts for difference, i.e. derivatives. And then, so they're the 3 tiers of assets. You have primary, secondary, and tertiary. Now, what happened, and okay, let's exaggerate this even more. If you had like a little flagpole on the top of this pyramid, which is like the complete bullshit tier, this is where you'd have, I would say, crypto. Okay, bullshit is probably not the right word, but like extreme tertiary, extreme tertiary tier. So you have primary, secondary, tertiary, and then a little flagpole or a lightning rod, and that's what crypto is, because crypto is not really backed or based on anything. Like you could look at orange juice and oh no, that's a bad example. Yeah, so let's just say crypto is right at the top there. Now what happens is so starting at the top of the pyramid, so with, let's say, the lightning rod, which is crypto, you have extremely high ROI or potential ROI, and you get extremely high risk. There's lots of risk with crypto. Not as an asset class in itself, but you can lose your crypto, you can get hacked, all that sort of stuff. Let's then go down to the tertiary tier. Again, you can have the potential ROI is quite high, and there's also higher risk. But as you go down into the primary, secondary bases or tiers, the risk is very, very little, but then the ROI is pants. It's pants. Like if you owned, thousands of tons of copper, well, is there cash flow from it? No. Is there any risk with copper? Well, it could get nicked, but who's going to nick 1,000 tons of copper? There's not much risk. You have your wealth is then stuck in that copper, and it's not going anywhere. And then I guess your price is your worth is derived on the spot price. But and so as you see, when you look at this pyramid, it's safe, risky, risky. And so when you look at most of the billionaires on the planet, they are, all the tech billionaires, Zuckerberg, Bezos, Musk, Gates, Warren Buffett to a degree-ish. Oh no, he's not a tech billionaire. So let's look at all these tech billionaires. Where have they derived all of their wealth from? Well, their wealth is derived from their stock. And what is a stock? As in a company. It's in the tertiary tier. So it's way up there. So nearly all of the billionaires that you're seeing popping up right now, they're all in the tertiary tiers. So they're making their wealth by listing their company on the stock market, which is again way up, right in the top of that pyramid there. Very tertiary, not really based on stuff. And when you list your company on the stock market, by law, you have to then sell 25% of your company to the public, and that's why it's like a secret exit, really. IPO listing or an ICO listing if you're a crypto project. But what then happens if you look at all these billionaires is that they go, oh shit, I've made all of this wealth up here in the top tertiary layers. I need some solidity. I need some stability. Sorry. And so what happens is they then reallocate all of their tertiary wealth up here way down. Okay, and they start racing down. So if you look at I think Bill Gates is probably the biggest example of this. He has been one of the richest people on the planet for a long time. He's developed it via computers and Microsoft, etc. But what does he do with his own money? He's raced his money down to the primary assets. So Bill Gates is the largest private landlord or real estate owner in the US. He owns more farmland than any individual on the planet. And so he's taken all his complete computer stock market type wealth up from the top, and he's raced it back down to the bottom to, I guess, solidify his base. And so he's now got raw, hard, primary assets, farmland, land, basically. If you look at Bezos is also one of the US's biggest real estate owners. Warren Buffett owns pretty much all of San Diego and Santa Fe. He owns the Santa Fe railway network, which is I guess a primary / secondary asset or business. And so hey Jason, heard tears and my ears pricked up. Oh yeah, no, nothing. Capital rebalancing is key when implementing passive and acceleration strategies for building wealth. Keep the pyramid the right way up. Yeah, I completely agree. And Jason and I think we agree on pretty much everything when it comes to wealth accumulation and stuff like that. So, yeah, so all the billionaires, they're racing their money down to the bottom. They're buying up land, they're buying up physical stuff. Yeah, and so that is, and so they are, I guess, the asset tiers. And then you have to sort of, let's bring this back to us mere mortals, us plebeians. Where is our wealth derived? So I guess the majority of people here have a job or a business, which is great. But your job or a business, what is that based on? So, for example, I have one of my businesses, I guess, is an internet company. Well, shit, that business, if I was to pinpoint where on this pyramid my business is, it's, I guess, well, yes, it's a company, so it's at least a secondary thing, which is great, but it's an internet business, so really it's like a tertiary type asset, because it's a business based on the internet, which I guess you can sort of call the internet a hard thing these days. You can't really destroy the internet unless you got rid of every node on the planet, which at the same time, which is unlikely to happen. So, yeah, and then I guess, yeah, so again, if you've got crypto, if you made a nice large chunk of wealth from cryptos recently, well, all of that wealth, that fast wealth, so to speak, is right at the top. So this is why it's never a bad idea to sell out crypto, as in crystallize some of those profits and then reallocate into some harder stuff. Now, I would always say, if you reallocate into a business, that's always a good thing. If you can get a good bit, I mean, even if it takes you 5 attempts, 10 attempts, just do it. The risk to reward ratio for running a profitable business, even if a slightly profitable business, the risk to reward ratio is obscene. It's obscene, honestly. Like, everyone, I think, should really strive to try and get some sort of side hustle going. If you are sat on profits or spare capital, your job really is to try and convert capital into cash flow. That is the key to wealth. I cannot stress this enough. The simple key to real wealth is converting capital into cash flow. That's what you need. That's the skills. It's capital arbitrage, basically. Right. Does this make sense, or have I just gone on about pyramids and tertiary anyone in Clubhouse want to pop their hand up? Ask any questions whilst the Facebook lag catches up? Does it make sense, or have I just confused everyone? No, I've got a like here. Cool. Right. Any questions? That's pretty much all I wanted to cover today with these asset tiers and stuff like that. And I guess, just keep them. Got to make your fast wealth at the top with the fancy stuff, and then try and solidify your wealth down. Which is why ultimately I do want to own a lot of land. A lot of people think I hate property and land and stuff like that, but I don't. It's just that you have to understand what stage of your wealth generation journey you're in. And so for me, until you're financially free, and in my opinion, so everyone has a different sort of line in the sand of what financial freedom means. But for me, financial freedom is F off money. Literally. It's the amount of money you have where you can effectively say piss off to anyone if they try and mess around with you. So for me, I've got a target of £12 million. And when I say net worth, what I don't mean is I want a liquid net worth of 12 mil. Okay, so having a total net worth of 12 mil compared to liquid net worth of 12 mil is completely different. So in fact, this is a really good topic. Hopefully we can, let's quickly dive into it. So when you look at Elon Musk, or Bill Gates or whatever, and they're like, Elon is the richest person on the planet right now, yada yada yada. How much of that is liquid? Not much. All of his wealth is tied up in Tesla and SpaceX stock and Boring Company and and all that sort of stuff. So he cannot realize any of his wealth. People say, he's worth 100 billion or whatever. Yeah, he can't touch that. He cannot sell his stock. Well, he can, but then he'll get like 10p in the dollar because the stock will go plummet. And so if I was to, on paper, so this is why I'm about to say something incredibly douchebaggery, okay, and I don't mean it this way, but I'm only saying this to make a point, okay. So whatever I'm about to say, my context here is that it is a very douchebaggery thing to say, but and I don't mean it in a douchebaggery way, okay. But if I was to explain my personal situation, I am what I call a poor millionaire. So I'm just going to let that sink in a bit because it's a bit weird. I am what's called a poor millionaire. So on paper, in fact, I actually just tried to tot up using realistic fair market value prices. I totted up my net worth the other day, and it's between £2.5 to £3 million. Okay, now that may, to some people, that may be like, oh wow, Siam's a millionaire, but it's not as it seems, and this is where a lot of people, I guess, hide behind numbers. And so this is, I was about to say lifting up my skirt again. I can't say that now. This is me lifting up my kilt. So yeah, on paper, I am worth £2.5 to £3 million, just like on paper, Elon Musk is worth 100 billion or whatever. But how much liquid can I actually realise? If I was to try and realise that £2.5 to £3 million, I would then have to go through the ball ache process of selling up every single business I have, because most of that equity, that net worth, is tied up in my businesses. Now, am I going to sell up every business? No, I'm not. So it's never going to happen. So in terms of liquid net worth, it's a lot less than that. I could rustle up 500 grand in cash, like within. So when I say liquid net worth, what I mean is how much cash could you rustle up within a week, basically. So that's how I sort of see things. If I had a gun to my head and said, right, rustle up as much cash as you can, you have a week, or bad things happen, I could rustle up probably only $500,000 in cash. So whereas I couldn't rustle up 3 million, 2.5 million in a week, because you just cannot sell your businesses like that. And so that is the key definition. So this is going back to a point. So that's why I say I'm a poor millionaire, so to speak. So my financial freedom sort of benchmark for me personally, and it's different for everyone. I want 12 mil cash, basically, which means in real terms, in order to be in a position where I have 12 mil in cash or liquid, I'll probably have a on paper net worth of 20, 30 mil. But that's just my target, because I've got some silly things I want to do. I want to go to space and all that sort of stuff and set up all sorts of crazy companies. And in order to do that, you need to put your money where your mouth is. So, for example, if I wanted to set up $100 million or $500 million fund to go and do something meaningful, in order to be taken seriously, I would need to stump up 20 million quid of my own worth in it. So when I go to raise if I wanted to raise $500 million, when I go to all the the VCs, the fund managers, the banks, etc., and I say, I want to do this, I want to do this vertical farming thing, or whatever green project, and by the way, I've put 20 million of my own cash, which is X amount of my net worth into this, so I've got real skin in the game, and I will effectively be your stop loss. All of a sudden, when you're raising money, and you're basically putting your money where your mouth is and offering to be the stop loss for them, it's a better proposition, if that makes sense. So where was I going with this? Oh yeah, wealth generation. So so what I was trying to say with this is that eventually I do want to own shitloads of land, but not right now. And so I still get people trolling me online. Oh, Siam is a property hater. He will always hate property. Blah blah blah. Well, it's not the case. Oh, actually, it is. It is the case. I hate property. I like land. So I want land, but I don't want property. That's the thing here. I want land, not property. So property equals heartache. Right. That's the end of the douchebaggery part of this. Did this come across as a real douchebag type? I didn't mean it like that. I just wanted to make a point, if that makes sense. That people hide behind numbers. And when you see a celebrity, it's worth X million or whatever. It's really what do they have liquid? That's the key thing. So does that make sense, or all I'm getting is tumbleweed because of the Facebook lag? So those folks here on Clubhouse, any thoughts, questions, queries, comments? Pop your hand up and I'll give you the mic. Okay, we have a hand, and we have trusty Adam to save the day. Hey, mate.
Hi, mate. How you doing? You alright?
Howdy. You're my knight in shining armour here, filling up the silence.
Wealth tiers. What do you actually mean by wealth tiers?
Okay, sorry. Yeah, that's a whole topic which I've completely forgot. I've talked about asset tiers. Oh man, I'm going to have to do this tomorrow. Wealth tiers. Oh yeah, okay. So I'll do this tomorrow. The wealth tiers I'll do tomorrow. So everything I've spoken about today is all about asset tiers. Primary, secondary, tertiary, etc. And then crypto right at the top. Oh no, a flagpole on top of the crypto flagpole will be NFTs, non-fungible tokens. That is just complete lunacy at the moment. So wealth tiers are different, I guess, milestones in your wealth generation journey. So I can quickly reel some off. So you go from being broke and penniless. That's, I guess, the first step. And then you go to, I guess the first little milestone is where you have a rainy day fund. So you have 3 to 6 months worth of OPEX, or operational expenditure, sat in cash, so in this case, rainy day comes along. And then I guess and the next part's, there's no set order. So some people can achieve these in different orders, but then you're financially buffered when you have 6 to 12 months of OPEX in cash. You're financially safe when you have a year's worth of OPEX sat in cash. Not that you'd really want all of that sat in cash. You're financially independent when your cash flow, this is important, when your cash flow from your investments exceeds your monthly outgoings or your OPEX. And see, this is why these can happen in different orders. So, for example, you can be financially independent if your outgoings are 500 quid a month and you're living in a caravan, living on the land, etc., and your investments are giving you £501 a month. Technically, you're financially independent. Are you comfy? I don't know. You could be. Everyone's different. I personally wouldn't be comfy in a caravan. I like space. It's just me. I don't have any qualms saying that. I just like space. Yeah. And I like the finer things. I like, sleeping in a big king-size bed and doing my, starfish at night. So financial independence isn't all it's cracked up to be. And then you have financial freedom, I guess, when you have, actually, there's different. Okay. I think I've confused myself. So when I said financial freedom is F off money, I was incorrect. What I mean is financial freedom is where you can do whatever you want whenever you want. Okay. So if you had sort of a take-home income of like 20 grand a month, you can do whatever you want pretty much. And your lifestyle, if you have a sort of take-home income of 20 grand a month, your lifestyle wouldn't be that much different to someone that was taking home, £1 million a month. There's really not that much, of an uplift. I mean, there's a massive uplift if you go from, 10 grand a year to 50 grand a year. Massive uplift in lifestyle. And also from 50 grand a year to 200 grand a year. Massive uplift. But if you're sort of taking home 20k upwards, there's only so many cars and houses and pants that you can buy. So that's financial freedom when you can do whatever you want. And the thing that I was talking about, F off money, that's financial abundance. Okay, so when I talk about having 12 mil cash, that's financial abundance. Financial freedom comes a lot sooner. So yeah, thanks for clearing that up, Adam. Much appreciated. And Sparky Martin also said, I guess liquid also means you don't rely on it for income either. Yeah. Well, no, actually, it's a good point. Yes and no. I would actually say no. So liquid is literally whatever cash you can get your hands on. So what most of the time that would mean you liquidating your investments. So yeah, liquid means you whatever you can rustle up, basically. Right, that's half an hour. Hopefully that makes sense. Any other questions before we yeah. Okay. So,
are you likely to be on? Sorry, go on.
Yeah, no, go for it, Adam.
You can't see the chat.
Yeah.
That's right. I was just going to say, are you likely to be on Discord today?
Yes, I will. I'll see you. And what he means by that is, will I be playing Age of Empires later? Yes, I will be. So I've just seen some questions in the Facebook chat, and then we'll call it a day. So yeah, if you have a question, put it in here now whilst I scroll through them. Reese has said, to grow your wealth in the most efficient way right now, you should prioritize capital appreciating, so stocks, cryptos, or cash flowing assets. I would always say, no matter when, what period of the world we're in, it's always cash flowing assets. Real wealth comes from cash flowing assets, not capital appreciating. Because whenever you put money in a capital appreciating asset like crypto or stocks, you basically sat there with everything crossed, hoping that your stock goes up, or your stock gets picked up by Wall Street Bets and does another GME type shenanigans or whatever. So you just got to focus on cash flow. That is the real wealth path to wealth. Aaron said, just started Rich Dad Poor Dad's investment book. Are you saying go with business to buy the land property in the end? Yeah. So if you look at every billionaire on the planet, how have they made their money? business, literally. I'm ignoring all the nepotists, not the nepotists, those that got handed down the billions from their daddies and granddaddies and stuff like that, old wealth. I'm not talking about that. That's what I call, that's not earned wealth. If you look at all of those that have earned their wealth, it's from business. And yeah, I do have a little chip on my shoulder about trust fund babies. It's just I went to school with a whole bunch of brats and spoiled, entitled twats, basically. And, where, like, there's one douche who got a Ferrari for his 18th birthday. He rocked up to school, because at school you could, rock up in your car, and he wrote off his Ferrari in the first 2 weeks. It's stuff like that. Didn't earn it. Okay, so Aaron just said, I used to go with business, but yeah. So yeah, for me, growing the wealth through business and then eventually diversifying into land once I'm not in the aggressive wealth accumulation mode. Or apply the no money down approach the book is talking about so far. Bear in mind, I've got a few more hours to go on it. I need you to elaborate on that, because Robert Kiyosaki's done all sorts of no money down deal type stuff in the past, which you can't do these days. So when he wrote Rich Dad Poor Dad, he was writing stuff that he was doing in the 80s and 90s, and a lot of that stuff you can't do anymore. So yeah, I'm not sure what bit you're on about there. Stuart said, with respects... Oh, this is a good question. I love this question. So Stuart said, with respect to building wealth, how far ahead do you plan? Now, the reason I love this question is because I think there are too many people dicking about planning. And spending far too much time planning. Like, I know of people that have 1,000,001 spreadsheets on everything that they do, yet when I look at their productivity, it's very low. Why? It's because they spent all their hours making spreadsheets. Nothing ever comes to fruition on a spreadsheet. I promise you that. I've never seen a cash flow forecast that has hit the numbers. I've never seen any spreadsheet that has come true. So, in fact, I'm going to show you. I'm so sorry, Clubhouse, you can't see this, but I'm about to pick up my phone and show around my office my whiteboards. So, this is the maximum amount of planning that I do. So this is one board, and this is all in the WAP, by the way, how I break all of this planning down. But I start off with sort of my life mission up here. So you can't see this, and I'm holding the camera away so you can't see the details on purpose. But here, basically, I've literally planned out my life, my whole life. So I've got my life mission here. So phase 1 to phase 5. So phase 5 is when I'm multiple hundreds of years old, and phase 1 is basically where I am now. Yeah, I'm still in phase 1, to be fair. So I have sort of planned up my life, but there's no fancy spreadsheet. I've literally gone, what direction what do I want to end up doing, by the time I'm 100 years old or 200 years old, and what capabilities do I want? So that's my life mission. That's it. So this is my sort of water vein type, or wind vein. I just know where I'm going. Okay. Then I have all sorts of bucket lists and things I want to do. Like I want to orbit space for a week or two with my kids. I think that's going to be one of the best experiences ever. And thanks to SpaceX, that's definitely going to happen. I've got a legacy. Ignore that bit. And then I've got sort of like my sort of goal galaxy. So I have every year I do a goal galaxy, and that's the thing. I know what I'm doing in the big picture, but I'm only planning sort of a year ahead. So with this goal galaxy, I've got, nailing 2017, 20, whatever, and then a whole bunch, the companies, so these little sort of planets around the sun here are like are the businesses, and in each business I have key goals on certain things. So for example, with this one here, it says MFP, so My Fairy Pen Pal, so this is the new business I'm setting up with Ellie, my wife. For that year, so this whiteboard is actually a bit out of date. The sole goal for that year was break even with 2 staff, crowdfunding launch, soft launch. Yeah, we've done all that. So and so that's all I do. And every year I come up with new 1-year goals, maybe 2-year goals, because some things do take longer than a year to achieve. Then I've got sort of like this thing over here, which is target lifestyle. So that just says target lifestyle. And I've just put a whole bunch of balloons around it of, what do I want to be doing every day, on a daily basis. And this will change. And then before you know it, if you focus on the goal galaxy, your target lifestyle works. And then I've got this get shit done board over here. And that is literally just normal project management stuff. Just more project management shizzle. And then I've got this empty whiteboard at the moment, which just says Elon. So, yeah, that's just a quick whistle top thing. So Stuart, with respect to building wealth, how far ahead do you plan? Not much. A year, maybe 2 years ahead, based on the goal. So it may be like, okay, I've got this business. What profit target, what monthly profit do I want from this business, over the next 2 years? Okay, I'll go, right, this business I want to do 50 grand a month. Cool. And then all I'll do is I'll break down how the hell do I get 50 grand a month over the next 2 years with this business. Okay, what does that mean? Okay, so the first thing I then work out is how many customers is that? So how many subscribers is that? So it's X amount of subscribers. Cool. Okay, what's the cost per subscriber? As in, how much does it cost me to acquire a new customer? Sweet. Okay, so I've got this number. So all of a sudden, I now know I need to spend this much money on marketing in order to hit that target. Okay. I then look at what is the lag cycle on that marketing. So what is the the ad velocity, so to speak. So let's say you have £1 million. Let's say that target, whatever that number was, let's say it was £1 million. So I need to spend £1 million on marketing to get this business to make 50 grand a month profit. Okay. Well, what is the ad velocity? So so for me, because I do lots of Facebook ads, if you had an ad velocity of 1, what that means is you put £1 into marketing on January 1st, and that £1 is going to boomerang back 12 months later. That's really bad. Whereas if you had an ad velocity of 2, what that means is you put that pound in at marketing, on the 1st of January, and 6 months later you get it back. So you can then use that same pound twice. Well, let's say you had an ad velocity of 4. And what that meant is that, for every pound you put in, 3 months later, that pound comes back, plus, some interest, let's say. Well, if you then had a total ad spend of £1 million that you needed to do, really, you'd only need 250k, because you can use that 250k, it'll boomerang back in 3 months, then you can use it again and again. So what happens, at the end of the year, you've spent £1 million on marketing, but you've only had a pot of 250 grand. So that's what I then do, and then I'll just come up with some, marketing campaigns and, and stuff like that. That's how I plan business. I don't plan with spreadsheets and stuff like that. I prefer to spend time doing stuff than, playing around with spreadsheets. And unfortunately, that's why the whole world of businesses, MBAs don't do well in business. No offense if you've wasted 3 years or 2 years getting an MBA, but it's widely known that MBA holders are the worst people at setting up businesses, because MBAs are really geared towards the corporate world, where sort of like the senior exec level. So yeah, if you look at any big company, all of the senior, the C-suite, the senior execs, they will be MBA holders, but you'll see very, very little, statistically, very little, a small amount of MBA holders that go and set up a business from scratch and do well. So, and it's because, MBA stuff is full of, theory, spreadsheets and theory and all that sort of stuff. Right, let's scroll down. I think that's all the questions. Right. Alexander, yeah, we'll keep crypto questions for another time, because I see you've got a bunch of questions there. Hi Will, he said, I'm from a farming family and agricultural land is expensive and doesn't yield well. Yeah, exactly. Yeah, I completely agree. And by the way, when I plop my funds into land, it'll be at the point where I don't care about yield. Okay, so going back to those asset tiers, you make all your fast money up here in the tertiary and secondary tiers, and then when you're in your capital preservation phase of life, then you just go and park it in land and don't really care. But at the moment, I care about yield. So he says, seems to rise steadily, but I prefer rental property for giving off income. even with all the headaches it gives. Yeah, but as I said, it's all depending on where you are. So if you're in your aggressive wealth accumulation phase, then yeah, yield is everything, cash flow is everything. But once you're financially free or financially abundant, you may not give a shit about, you prefer to have security and safety rather than yield. Like if you're worth, you know, several $1 billion, I think you'll pay a lot more on, you'll be happy to pay a lot more for safety than yield, if that makes sense. I appreciate that. I would need to finish the book to ask it. Okay. Adam Kerrigan, analysis paralysis. Yep, I agree. Gary Bartlett, Siam, somewhere in your overflowing inbox, you should find a PM from me. Oh, sorry. Yeah, I've got like 50 unread Facebook messages. I'm so sorry. I'll go and look for it. Cheers, mate. Right, let's call that a day. Again, it's been 45 minutes. Hopefully today's been helpful. Yeah, right. I don't know what we're going to talk about tomorrow, but I guess I'll see you at 12 o'clock. I'll be trying to juggle the baby at the same time, so hopefully he's quiet. I'll just have to bribe him with chocolate again. So yeah, I will see you tomorrow at 12. Love you. Bye.